to talk about Disney here this morning as well, because speaking of price increases, this is another company where we saw some price increases at its parks, for example, and also other ways for the company to make money at its parks. We'll dig into that in just a moment. But first of all, the headline numbers, as we see the shares rise 6%. Earnings per share pretty much blowing away estimates here. $1.06 is what Disney reported. 57 cents was the estimate. Revenue also coming in ahead of estimates. And then if you break down what that revenue came from, parks seeing a comeback here, both in revenue and also, importantly, in operating income, and also, of course, the media and entertainment distribution and that part of the business doing well. Disney Plus subscribers up 11.8 million, which was well above the around 8 million that analysts were estimating. And so now the total subscribers just under 130 million. So that's part of the story. And then to go back to the parks for just a moment here, the parks operating income was $2.45 billion. You see the revenue there, over $7 billion. The actual park attendance, I thought this was really interesting, Stas, was lower than in 2019, but people are spending more. And as someone who went to a Disney park last year, can tell you, that was me. They introduced this whole Genie Plus. They introduced more lightning lanes. In other words, they introduced more ways to separate you from your money when you are in those Disney parks. And considering how good they are at that already, it is quite a feat. And that is paying off when it comes to that operating income number.
Yeah, I think for a lot of families, Julia, you're at that point where you have to weigh, do I want to buy a new car for my family or go spend 3 or 4 days at Disney? Because the price hikes, just based on what a lot of these Disney blogs are saying out there at the hotels, for drinks, rides, they have gone through the roof. So a lot of inflation also helping the parks business, which I think a lot of analysts on the street forgot that they existed here. The business swung to a $2.5 billion operating profit, $119 million loss last year, part because of these price hikes. Bob Chapek on the earnings call last night talking about how that momentum in attendance appears to have continued into this year, despite that inflation, despite it being costing more to visit various Disney parks. Also, let me just follow up too. Earlier in the week, we previewed Disney Plus. Disney Plus on the street, analysts were looking for 7 million net ads in Disney Plus in the quarter. They came out 11.8 million. That is a big, big beat. And they also talked about last night, they are not backing off their expectations for when this streaming platform could hit profitability in 2024.
And let's talk about also the sort of streaming strategy, if you will. The company repeating the growth in streaming is not going to be linear. And they're also sort of seemingly figuring out what the streaming release strategy looks like versus the theater release strategy, right? And deciding that some films are worth releasing in the theaters and some are not. So we're seeing that sort of learning process in real time. The Marvel movies, for example, it looks like that those are going to be released in theaters first. Bob Chapek on the call saying Doctor Strange, the next Doctor Strange installment, is going to go to theaters in summer. Encanto, which you're looking at right now, was a huge hit for Disney. And also, we don't talk about Bruno, which we have talked about on the show before, a huge hit for the company and for Lin-Manuel Miranda, who wrote the music for that musical, if you will, that cartoon musical. And so, it's interesting watching that strategy be formed in real time. We're going to talk more about this with an analyst a little bit later on. One more quick note, and that's about Bob Chapek. This is the first quarter of a Bob Chapek not under Bob Iger, right? Iger stepped down at the end of last year as executive chairman. Chapek now rounding out 2 years at the helm of the company. So it's interesting as he continues to put his stamp on it, what these numbers look like, Sas.
Yeah, no, it's a very good point, Joe. I'll also add, too, I was listening to their earnings call, and if you're one of those apes out there holding AMC shares, you should be terrified by this Disney Plus number and their content rollout plan. The fact they might be dumping more content on Disney Plus to meet their profitability goals and their efforts to reach about 260 million new subscribers or net subscribers on Disney Plus by 2024, that means you will probably be going to the movies list.
Yeah, good point.